The cost of a non-current asset is actually a little trickier than it might seem. You might think when you go to the shop and you buy an asset, that's just the price, and it is, but there's some other parts to it as well. Particularly from an accounting perspective, this is really important because it's going to affect our profit. So let's take an example. So what's the cost of a non-current asset? Let's take this laptop from Officeworks. So at the moment, you can see the price is $11.97. That'll have GST in it, but let's just for the sake of this, it doesn't have GST. And obviously, that's the purchase price. So you go, well, that's the cost, $1,197. However, what about some other things that you can either get with it or might come with it without even being a choice? So, for example, we've got this one. You can pay $169 for a repair or replacement plan. And what about this? Well, to use your laptop, you're probably going to need Microsoft Word, Excel, and PowerPoint. And for $97, you can get a 12-month subscription. Are they part of the cost of it? And what about this one? Maybe a lot of people, who get a laptop don't know how to set it up. So you can actually pay Officeworks through another company called Geeks to You. You pay $99 and they'll come and set up your computer for you. And it's like an ongoing service too, if it breaks down. So that's a pretty good idea. Is that part of the cost? So we've got a few things to worry about there. So what we kind of need is a rule to determine the cost of a non-current asset. And our rule is this. The cost of a non-current asset is all costs incurred in order to bring the non-current asset into a condition and location ready for use. But there's this second sort of clause here, which says, and these costs must provide an economic benefit for the life of the non-current asset. So we need the cost of a non-current asset is anything that we're going to have to sort of pay for or incur in order to get it ready to use and to our business. So we've got the words location and condition, which are important there, and also ready for use. And just as importantly, it's got to last for the life of the non-current asset. It can't just be for one period or 1 month. It's got to be something that will last for the entire life of the non-current asset. So what are some common items that make up that cost? Well, we're going to see different ones, so you can't predict everything, but these are the most common ones. The most obvious one we're always going to have is the purchase price or the fair value, and that is the price charged by the seller of the asset. So that would be the price that Officeworks charged. That was $1,197. However, we're going to need to deal with questions and case studies where maybe the owner gave the non-current asset to the business, and if that is the case, we will just use the fair value here instead of the price that was charged by the seller. Just important to note, with all the figures we're about to deal with here, this does not include GST, because GST is not a part of the non-current asset. When you're paying GST, you're reducing your GST liability to the tax office rather than buying an asset. So they're different things. So we don't want to see any GST in the cost of a non-current asset. So the purchase price or fair value is always going to be part of the cost. What else though? Well, some things we might see are delivery costs, the cost charged by the seller of the non-current asset to deliver it to our business. And again, this does not include GST. What else? Modification costs. So maybe it needs to be modified. So the cost charged by the seller of the non-current asset to modify it so that our business can use it. And no GST on that one. Maybe it needs to be installed. So the cost charged by the seller of the non-current asset to have it installed at our business so it can be used. And we might also see some taxes. Some things when you buy them, they have one-off taxes, not ongoing. The important thing there is one-off taxes. When you purchase a non-current asset, for example, stamp duty or maybe customs duties, things like that. So the cost must last for the life of the non-current asset. And when we do depreciation in a couple of videos time, we'll say, well, what is that? What is the life of a non-current asset? What does that mean? We're going to use this term here, useful life. And it is the estimated period of time the non-current asset will be used by the business to earn revenues. We usually measure this in years. That's just a fancy way of saying this is how long we think we're going to use the non-current asset for. That's its life. But basically, it's an estimate. So we'll look at that and say, well, it's not very, it's a bit unreliable in the sense that we, just making an estimate of these things. So how long should a laptop last? 1 year, 2 years, 3 years? How long should a car last? 3, 5, 10? This heavy machinery here, 5 years, 10 years, 20 years. What we'll have to do later on is we're going to have to pick one of those values for each of those and say, this is how long I think this laptop, car, or machinery will last. And therefore, that becomes its life. So we might say 2 years for the laptop. So its life is 2 years, 10 years for the car, and 20 years for the machinery, for example. And the point is, whatever that useful life is, and we really won't have to worry about it because the question will give it to us. It'll just say this laptop's going to last for 3 years, for example. But we just want to think, whatever that life is, will the cost last for the length of that lifetime? So let's take some examples here. Let's take the business purchased a new vehicle for $40,000. And what we're going to say is, for each of these costs, is it required in order to get the non-current asset in a condition and location ready for use? And will it provide an economic benefit for the entire life of the non-current asset, not just a little bit? So this is an obvious one. And if both of these things are true, we're going to say they're part of the cost of the non-current asset. But if either one is not true, we're going to say it's not part. So with the purchase price, that is always a part of the cost. You can't get an asset ready into a location and ready for use if you don't buy it. So that's an obvious one. This one, the business purchased a new computer network and paid $4,000 for 12 months of servicing and maintenance in case the network breaks down. Is that required to get it in a condition or location ready for use? You could argue maybe. You could also argue maybe not. But the point is, this is not going to last for the life of the asset. It's only for 12 months. So I'm going to say no, that is not part of the cost. The business purchased a new property and paid $5,000 to insure the property and its contents for the next 12 months. Technically, you don't need to use a property, have it insured. It's a bit dumb to do that. So it probably doesn't meet that criteria, and it definitely doesn't meet this criteria because a property is going to last a lot longer than the next 12 months. So it's not going to be for the life of the asset. So I'm going to say no, not part of the cost. The owner of the business contributed their personal laptop to the firm with a fair value of $1,400. So that is always part of the cost, the purchase price or fair value. This one. The business purchased a new vehicle and the dealer charged $200 to fill it up with petrol. So yeah, I've bought a new car and that happens. They fill it up for you, but maybe they charge you. Is that required to get the non-current asset in a location and condition ready for use? I'd say yes. You can't drive a car unless it's got petrol. The problem here is it's only $200 worth. Like that petrol's going to run out. That's not going to last for the life of the non-current asset. So I'm going to say that petrol is not part of the cost. Let's just do a few more examples. The business buys new machinery and is charged $1,000 to have it delivered to us. Well, we can't use it unless it's delivered to us, so that's true. And will it last for the life of the asset? Yeah, once it's been delivered, that's it. We'll never need to pay for that again, so that will be part of the cost. The business purchased a delivery van from an overseas supplier, and we were charged $2,000 to have the vehicle modified from left-hand drive to right-hand drive. So maybe it was an American car, for example, so we had to switch it from left to right. Is that required to get it in a location and condition ready for use in Australia? Yeah, absolutely. Will it last for the life of the car? Yeah, once you've done that once, it's done. So that would be part of the cost. The business bought a new vehicle and paid $2,000 for the registration for the next year. So you've got to pay car registration every year. You cannot use a car unless it's registered. So it clearly is required to get the asset ready for use. But yeah, it doesn't last for the life of the asset because you're going to have to pay that again next year as well and the year after. So we're going to say no, not part of the cost. And lastly, we've got the business purchased a new building and was charged $7,000 in government stamp duties. You'll find when you buy a property or a car, you get slogged this one-off tax called stamp duties. Can you buy it and get it ready for use without paying that tax? No. So it's definitely needed to get the asset in a location and condition ready for use. And it's only paid once at the beginning of the life of the asset. You never need to pay it again. So that will provide a benefit for the life of the asset. So we would say, yes, that will be part of the cost of the non-current asset. And that is everything we need to know about how to define the cost of a non-current asset. All the costs required in order to bring it in a location and condition ready for use that will provide a benefit for the life of the non-current asset. So just to go back to our laptop example from the beginning, let's start with the purchase price. Well, clearly both of those things are true. You need to pay the price to get it ready for use and it lasts for a lifetime, so that would go in. This additional cover here, if you go into the details here, you'll see it's a repair and replacement plan, and it's only valid for 3 years. So that depends how long you would think this laptop is going to last. Let's say I think that laptop is only going to last for 3 years. Well, it depends. You could say, well, now, is it required to get it in a condition and location ready for use? No, you can use it without paying this. So you don't even need to pay that at all. You could still use it. So I don't think it meets this criteria here. Then we've got Microsoft Office subscription. It's $97, but it's only for 12 months. That's not going to last for the life of the asset. You can't really use it for business without those programs, but it's not going to be part of the cost of the non-current asset because it doesn't last for its life. And lastly, we've got this Geeks to You prepaid setup. It depends on whether you can set the computer up yourself. Let's say you can't. Well, yeah, there's $99. It's a one-off fee and it lasts for the life of the asset. Once it's installed, it's installed. You never need to pay for it again.